In this update, I'm going to look at the Australian election result, see what's driving the Australian dollar, and provide an update on market valuations across the globe. The Australian election provided some certainty that there will be no changes to franking credits or negative gearing. This is welcome news to investors because it makes both shares and property a more attractive place to invest. This chart shows the price performance of the Australian market going back to the year 2003, noting that we are not far away from all-time highs. Investor confidence should improve as a result of the election, and this should lead to an economic boost for the Australian economy and the stock market. I also note some interesting divergence between the Aussie dollar and the iron ore price. This chart shows the price of iron ore in black since the year 2008. The Australian dollar is in blue. The relationship has been very close in the past, but more recently, this relationship has been breaking down. Iron ore has been marching higher, driven by expectations for additional supply cuts from Brazil. This is in response to a catastrophe by mining giant Vale, where 134 people died as a result of a collapsed mining dam. So why then has the dollar been falling? The short answer is interest rates. The following chart is showing a 10-year history of 10-year interest rates. The blue line is the USA, Australia is purple. The purple line, Australian rates, have declined in a major way over the past 12 months relative to the US, and this can explain the weakness in our currency. What this chart also shows is that forecasting moves in the Australian dollar is not easy, because investors are required to predict not only the direction of Australian interest rates, but also the direction of US rates. In the Atticus portfolios, the falling dollar has been a boost to returns on our international holdings, and we have responded by taking profits to some extent and reducing our exposure to currency moves. We have done this by switching some unhedged currency exposure into hedged exposure. The final chart I have here is a regular chart I use, which compares the three major regions in terms of market valuations and earnings. The top part of the chart shows the price earnings level. Emerging markets in yellow, Australia in blue, and global shares are in maroon. Across the board, valuations have taken a bit of a hit recently on the back of stalling progress on tariff negotiations between the US and China. So far, emerging markets have worn the brunt of this. The Atticus view is that a trade resolution is in the interest of both parties. So whilst there are seemingly bumps in the road, these bumps are more likely temporary rather than permanent. The bottom part of this chart shows earnings across the same regions. Overall, things are still looking quite flat. So investors need to be keeping a close eye on leading economic indicators to work out which direction the earnings picture will go next. And that is something we can talk about in a future video update.